Hello everybody and welcome to Strategy Now here from MarketStream.live. My name is Joe Cusick from the Cusick Group, securities provided by MoneyBlock. Now, we see that the market going into the midday, it pulled back from its highs. We saw we were solidly in the green. I'm taking a look at it right now. This morning, we discussed that with what's hot on the open. It's pulled back. We see the S&Ps, they're shedding about 17 points. The NASDAQ shedding about 51 points, and the Dow Jones is down about 107 points. We continue to see that the decliners are outpacing the advancers on New York as well as on the NASDAQ. And we're seeing that new lows are outpacing new highs on the New York Stock Exchange as well as the NASDAQ. So you firmly see that there is some uncertain, to say the least, environment or sentiment that's starting to build. Now, many will say, hey, it's an election a week from today. It's a very contentious election. We have a lot of headlines. And I would say, yes, that's led to further uncertainty into the market, but is that the only reason why the markets are acting like they are? There are other factors, okay? So the answer is no. And I think they're important to include in this dialogue. So let's take a look, first of all, from a technical perspective, which we'll cover more this afternoon at 3:30 Eastern Time in Tech Talk. But take a look at the S&P 500, the Dow Jones, the NASDAQ, the S&P 400, which is the mid-cap, as well as the Russell 2000, the small-cap indices. They're all below the 50-day moving average. As a matter of fact, the Russell 2000, that canary in the coal mine, as I call it, index, which tracks the domestically centric small cap stocks here in the United States, they're challenging their 200-day estimated moving average. Bottom line is that we see that midterm support, that 50-day moving average, is now resistance. All right, so that is something from a technical perspective. If these indices are going to have a catalyst from a technical perspective to the upside, you want to see it break that 50-day moving average, and you're going to want to see it with volume. We're not seeing that today, so that's something that you want to put on your radar. That's also going to impact the strategies that you're going to be putting out there. Now, there's also valuation concerns, meaning look at the value, the strength in the dollar. The dollar was strong up until today. As a matter of fact, we saw considerable weakness in the dollar coming into today. The dollar index was trading right around 98. It's pulled back. It's trading right around 97, 96 and some change, down about 60, 70 cents off of its best levels. The strength in the dollar was something that the central bank here in the United States, our Fed, was utilizing as a tool. It was utilizing it as a tool which was helping global growth continue, which then would allow the U.S. to come in and say, well, you know what, we're going to continue our rate hike advance. And the weakness in the dollar now may be putting that at a hold. Now, the Fed does have a meeting today and tomorrow. Let's watch that policy statement tomorrow very closely. There's only a 5 to 7% probability that they could potentially move rates above 50 basis points or even to 75 basis points. So there's very low probability of that occurring. But that policy statement with the current environment we're in, that's going to be something that we're going to watch. The other thing is that the relative weakness in the results and guidance from one specific sector, and that's industrials. Industrial companies have been coming out and they've been lowering guidance and they've shown weak results as far as earnings. That's concerning for me. Industrials are a pulse of economic growth. We did see that the purchasing managers indexes around the world, specifically in Asia, have come in very positive, but in general have been coming in positive around the world. That is a forecast or a barometer of future economic growth. Without having industrials and these companies leading the way, I'm going to call that into question. I think that you're going to see that the market has stretched valuations. We've seen that it's been unable to break through these upside price levels, especially when we were challenging a few weeks back all-time highs in all the major indices. It's just not happening. The other thing is that you're starting to see that global central bankers are starting to show some angst, as well as saying that they're hitting policy limits on how they're controlling rates at this juncture. As a matter of fact, they're not very comfortable with keeping rates this low, and you're seeing global yields, as well as here domestically in the United States, move to the upside. That means bond prices are under pressure. We're going to continue to see if that is still occurring going into the election and for the remainder of this earnings cycle. Now, the lack of this market leadership isn't totally negative, right? I mean, we've seen an offensive sector, finance, be a real strong leader going into the fourth quarter of this year. As a matter of fact, that sector is up 1.7%. That's a positive. But obviously, they're relying on interest rates to start moving to the upside. They need those yields to continue to rise if they're going to start to see that their margins are going to increase. If that's not going to happen, financials could come under some pressure. And that's an offensive sector that we don't want to see, if we're bullish, under pressure. Taking a look at the fear index, or the uncertainty index at this stage, the CBOE VIX, VIX, it's currently trading at right around 19, up about $1.95 today, and that's about an 11.5% spike just in today alone. Now, the index is up about 43% going into the fourth quarter. That's telling me now that we're out of the teens, we're going to start looking at the 20s. Once you get into 20s, now you're starting to sense fear. 22, 24, 26, that's where fear comes into the marketplace. No more of the complacency that we were seeing with 11, 12, and 13 as far as volatility. That's going to impact not only the uncertainty or psyche of the market participant, it's going to impact your strategy selection. You're not going to be deploying just buy and hold type strategies in that environment. As a matter of fact, you're seeing that after post-earnings announcements, there's been a lot of raising of capital. As a matter of fact, looking at the institutional cash holdings as well as the retail cash holdings, it's the highest level we've seen pretty much all of fiscal 2016. That's telling you that that uncertainty is starting to impact the strategies that are being deployed and the exposure that we have in markets. Now, that pop in the VIX is something that you want to keep an eye on going in for the remainder of the earnings cycle and into next Tuesday, November 8th, for the elections. With the losses that we continue to see in the large cap index S&P 500, I'm very focused on watching that $2,100 level, $2,100 to $2,105 level. If that's broken, that could be a catalyst just from a technical perspective. And like I said, we'll talk more about that at Tech Time at 3:30. Also taking a look at some of the other earnings announcements that we're going to have at the close of business today, I want to give you a little heads up. There's about a handful of them that I want to cover. First, I want to start with Electronic Arts, EA, trading right around 78.35. The options market is pricing in the potential for this stock to move up or down about $5.35. You're looking at basically a 6% move being priced in to the stock going into this event earnings. Square, ticker symbol SQ, trading around 11.20. They're pricing in the potential for Square to move up or down around 94 cents into their earnings announcement. You're looking at almost an 8 to 8.5% move in Square going into their earnings. Western Union, ticker symbol WU, currently trading at 19.79 right now. They're pricing in up or down plus or minus $1 in the stock going into the earnings announcement. That's pretty significant on a $19 stock. You're looking at a 5% move. Cavium, ticker symbol CAVM. Now, this stock is trading at 56.26. They're pricing in a whopping 10% potential move going into this earnings announcement in their options. In other words, the options are telling you that, or indicating that this stock could move either up or down about $5.21 going into the earnings announcement. That's a pretty significant move being priced in. There's some definite volatility or fear or expectation built into a potential violent move into that stock. Looking at Match Group, ticker symbol MTCH, trading at 17.79. They're pricing in, again, a 10% move of either up or down, or in other words, right around $1.71 plus or minus on this stock going into their earnings. A lot of volatility in there. Expectation of some pretty violent moves. Now, that violent move could be either up or down. It doesn't care the direction. It's just pricing it in. And then finally, Zillow Group, ticker symbol ZG, stocks trading at 32.58. They're pricing in the potential move either up or down about $2.39 in the options for the stock going into their earnings. Folks, that's about an 8% move in the stock. So there's some pretty significant volatility in the market. There's some uncertainty due to the fact that we have the election. We have some macro risks that are starting to rear their heads. Bottom line is we're going to keep a cool head about this. We're going to cut our size down. We're going to deploy the right strategy for the environment we see, and we're going to talk more about that in Tech Talk and also the closing bell today here at MarketStream Live. All right, folks, have a great rest of the trading day, and we'll talk to you soon.